Hello, everyone. Welcome to the next session of High Performance Sales. Our goal for this program, this show, is to help sellers become the best. We believe the journey to becoming the best is not just about the knowledge or the skills you acquire and what you know, but it's about who you become. So we won't just share with you the usual sales best practices and skills. We're going to look wider so that you can become a high performer. So we'll look into things like mindset, even health, happiness. And of course, today, what we're going to be discussing is finance. So my next guest is an international business trainer who is helping thousands of people learn the language of business, which is finance. After 12 years working at Ernst Young and as a VP in JP Morgan, he wrote a book called Let's Talk Finance to help non-financial professionals advance their careers by more easily understanding the nuances of finance. He has worked with over 300 companies in over 35 countries. And what I love about his book and training programs is how practical his teaching methods are. He actually walks students through the finances of famous companies like Apple, Amazon, Google, and Tesla, and helps them understand how their finances actually tell you the story behind those businesses and why their leaders make certain decisions. In fact, we are going to go through such examples in our session today, so it's going to be a really great and informative session. So please help me welcome someone who I greatly admire, not just for his professional achievements, but more for the fact that he's also a father of 5 children whilst doing what he's doing. So please help me welcome Ted Wayman. Ted, welcome to the show.
Well, thank you very much for having me on, Moeed, and it's a pleasure to be here.
Yeah, I'm really looking forward to our session today, and thank you for joining it, because when we talk about sales or even business in general, and some of the, let's call them intrapreneurs, so people who work in HR, in marketing, in R&D, and innovation and sales, they're working within the ecosystem of business. And as Warren Buffett said, if you want to, accounting or finance is really the language of business. So if you want to work in business, you've got to understand that language. So first question I want to ask you, Ted, is, you work with a lot of non-financial professionals who must learn finance in order to advance their career. Why do you think people find it so hard to learn finance?
Well, it's a good question, Moeed. And actually, I'm just going to address your earlier point about Warren Buffett. What I am constantly surprised at or amazed at is that when I go and see my clients, often I have very little knowledge about what they actually do. And I will use my clients' financial statements where possible. So working with senior managers, middle managers in the business, I'll put up their financial statements and I will walk them through it and say, well, here's a problem, here's a problem, here's a problem. And they all go, oh my God, how do you know so much about our business just by looking at numbers? Yeah. So I think your point really is absolutely valid. As Warren Buffett was saying, the numbers tell the story. And our ability to interpret those numbers allows us to interpret the story. So if I'm a salesperson and I'm going out to see one of my clients, looking at the numbers, reading those numbers gives me the story that I can then reflect back to my clients. I'm talking their language. I'm showing that I understand their business model. So that's kind of, I think, where Warren Buffett was trying to get to in terms of, this language of business finance.
Right.
So your question was, why do people find it hard to learn a language? Well, you're absolutely right. I have 5 kids. Most of them, in fact, I think 4 of them are in my house at the moment. So hopefully we're not going to fall over on our bandwidth with Netflix and Xbox and all the rest of that kind of
all
challenges.
The good stuff. Yeah.
Yeah, absolutely. And actually, just at the kitchen table this morning, my youngest son says to me, why should I be learning a language? Why does everyone have to learn Spanish or something? He says, I can learn, maths and I can do my chemistry. Why should I be learning Spanish as well? And there's an element, I was kind of thinking about the analogy there that, you know, if you're an athlete, you don't just train in your sport, you train on everything. You do endurance, you do sprint, you do strength, you do aerobic, you do anaerobic. We develop ourselves completely. And in exactly the same way, in terms of our brain is effectively a muscle, and we're trying to exercise all the different parts of it. And some of us struggle with that language element. I know certainly I'm not very good at languages. My wife is fluent in Italian and German and you know, a number of different languages. She has a brain that works like that. So, you know, finance is a language. It's you know, we use a lot of terminology in finance. Lots of people ask me, Ted, you know, why do you call sales turnover and revenue and income? Why can't you just have one word? To which I'll usually reflect, well, you know, why do the indigenous Eskimos, for example, have lots of words for snow, or Hawaiians have lots of words for wave, and we here in England have lots of words for rain, for example. So understanding that language, the richness of the language, I think is really important. Now, if you're going to learn Spanish, you can read a book on Spanish, just as you can read a book on finance, but you're not going to learn Spanish like that. You can go to a seminar, for example, and you can sit either with headphones on, or you can talk to your teacher and you can kind of learn your basic Spanish, but you're not going to become fluent in Spanish. The way to become fluent in Spanish is to go and live in Spain and immerse yourself in the culture, immerse yourself in the language itself. Or obviously Spanish is one of the most popular languages in the country's world, so you don't have to go to Spain, you can go, you know, anywhere in Southern America, etc., etc., but anywhere that speaks Spanish, and then you're forced to actually use that language on an ongoing basis. So in exactly the same way as finance, you're absolutely right that in order to progress your own career, everybody needs to understand finance. And we can leave marketing to the marketeers, we can leave operations to the operations people, we can leave HR to the HR professionals, but every single individual needs to understand the numbers. And I've lost count of the times that I've had chief executives, senior board members sit down with me and say, Ted, I need you just to get me through the basics because I have no idea what they're talking about at that board meeting. So the ability to speak that finance is important for any individual who's looking to invest in themselves and invest in their own career, as well as for any organization that needs their senior managers to understand what a budget is, how to put it together, how to run against that budget, how to influence the finances, and how to understand the financial implications of their day-to-day operational decisions. So it's an immersion thing. We've got to live and breathe finance, and as you as a senior manager progress through the organization, you will find you'll be exposed to it more and more.
And do you find that companies are teaching their non-financial staff about finance, and especially the finances of their business, or do you find that that education is still lacking?
Well, it's a little bit of both. I mean, you know, it's a bit like saying, you know, do companies invest in their staff? You know, there are some companies which are very good at investing in their staff, and some companies who really aren't so good. So my aim is to kind of bring this financial fluency to the masses, and you know, working with people like yourself, for example, you know, opening up the audience. And quite often we find, you know, from a company perspective, companies are often investing in what they think is important for them to help achieve their operational or strategic goals. But also, you know, individuals have to think about, you know, what's in the best interest for me. Now, I personally think finance is in the best interest of anybody. You know, the ability to understand your own finances, to make sure that, for example, did you know that if you borrowed $100, you may remember Wonga.com. If you borrowed $100 from Wonga.com and you paid nothing for 10 years, you would have ended up owing $115 quadrillion. Okay, because they charge a 5,853% rate of interest. So just little basic things like that, just understanding the finances and you know, being able to manage our personal finances, business finances, I think is really, really important.
Yeah, and I think the personal finance element as well, if anything, that should be the thing that motivates people. And certainly with sales, I was lucky enough to work in a company where they gave us training on finance, but I found that once I cracked that and started to learn what to look for, my discussions with my prospects and my clients just completely took a different level. In fact, I was able to unpack just from looking at their finances, what was going on in that company, why they were making those particular decisions. And I know that's something we're going to discuss later on.
You're absolutely right, and I'm sure that you're hammering home the message that for a salesperson, the first thing you've got to do is build rapport with your client.
Yeah.
I'm only gonna buy from people who I like. It's building that rapport, and if you can actually reflect some of the pain points and say, my understanding is it looks like your company is. People think, oh my God, these guys know exactly. They've really done a little bit of homework. Because I've spoken to senior buyers in companies, and they have a test. They'll say to a salesperson, name 5 things my company does, or name 5 products my company sells. And lots of people they haven't even thought about it. They're all like, here's my product, buy my product. Not going to buy my product, I'll go find somewhere else. It's not thinking about that solutions-based sales, understanding the client. And if you're sitting in a waiting room with 5 other salespeople from 5 other companies, what have you got that's going to get you across the line ahead of them? And that
Absolutely.
kind of deeper understanding, I think, is a crucial element to that.
Absolutely, yeah, I couldn't agree more, Ted. And one of the things I loved about your book, and just to let you know, you showed yours, I've got my copy here as well. One of the things I loved about your book, and is kind of how you help people not only read financial statements, but you also help them understand the story that financial statement says about the company. And a lot of sellers are, they might be daunted by trying to translate such statements, particularly if you're kind of trying to work with a big public company, and often those statements can be quite complex. So just to kind of help those that are viewing this and viewing the show and might be daunted by the prospect of looking at those financial statements, can you share in your experience, what are the kind of top 5 things that someone should always look for when they're reading a financial statement to give them that quick story?
Okay, well, that's a good question. And actually, you're right that, some of the financial statements I look at run to 200 or 300 pages.
Yeah.
And you kind of look at that and think, oh my God, where do I start? And if you take a kind of a 200-page document, as a general rule of thumb, the first part is all chief executive, chairman, CFO, CEO, corporate governance, board, all the kind of risk management and all that kind of, it's kind of marketing fluff. Okay.
Yes.
Now, I think there's useful information in there in terms of the strategy of the company, what they're trying to achieve.
Yeah.
But in the middle are the financial statements. And for me personally, that's exactly where I go. The last part is all the notes to the financial statements. Yeah. So the financial statements will reference different notes, which basically says, if you want to know more about this number, go and have a look at this note number. So if I get a financial statement, I'm an accountant, so maybe it's in my blood, but if I pick up the annual report of a company, I'm going straight to the financial statements, and I'm looking at there's 5 key things which I'm looking for. The first one is their profitability. So they're looking for their profit margins and their profitability. And most people look at that because is a company profitable? Yes, it is. Good. No, it isn't bad. Okay. Now, that's not the full story, but it's certainly the first part. Second one I want to look at is cash generation. So is it generating cash? Because if you're not generating cash, you're losing cash. And if you lose cash for long enough, you go pop. Okay, so is it generating cash? And that's probably, and I'll explain it a little bit later, but that's probably my favorite number. Now, you shouldn't really have a favorite number, but that is my favorite number of all the financial statements. I then look at if they're funded through debt, can they afford that debt? Fourth one is liquidity.
Could you repeat that again?
Yeah, so the affordability of debt.
Right.
So let me give you an example. So if you want to take out a mortgage, for example, certainly here in the UK, if you want to take out a mortgage, the bank will send you a very long form that says things like, how much do you spend on socks each month? And it's a stupid question. Nobody buys socks on a monthly basis. but the idea is what they're trying to do is to find out, can you afford the mortgage? So they'll say things like, how much do you spend on food each month? Because if you don't buy food, Moeed, you'll die. And if you die, you can't make the payments on your mortgage.
Right.
So the bank is concerned that you eat to survive. How much do you spend on travel? Because if you don't travel to work, they'll sack you. And if they sack you, you won't be able to afford the mortgage. You won't be able to afford to eat, and then you'll die. I'm being a bit facetious here, but you kind of get the point that the bank is trying to make sure that you can afford your mortgage. And exactly the same way, if a company is funded through debt, I like to look at, can that company afford that debt effectively?
Okay, and are you looking at sales as well as expenses to be able to see if they can
I'm going to give you an example. So in a minute, I'm going to show you some examples of what I mean by affordability of debt and how we measure that and how you can spot warning signals. Okay, so profitability, cash, affordability of debt. The fourth one is liquidity. And liquidity is absolutely crucial. And it basically says, can you pay your bills? Okay, can you pay your bills on time? Can you pay your staff? Because Moeed, if you don't pay your staff this month, they won't turn up to work next month. Now name a company that can survive without its staff. They don't exist. And if I'm a salesperson, I'm going to be making sure if I sell you a product, Moeed, you've got to be able to pay for it. Okay, there's a great mantra in the finance industry that sales is vanity, profit is sanity, but cash is reality. So until that sale actually arrives in my bank account as a cash, I'm kind of, I'm not really interested. The salespeople, oh, aren't I wonderful? I got this deal. No, let's get the money in. I want to see the hard, cold cash. And then the last section is it's outside of the numbers. It's called the commitments and the contingent liabilities. And it's it's buried right down deep in the accounts, but it's what's known as an off-balance sheet finance. And it's a way of just looking at, are there any gremlins? Are there any nasties sitting in this company that I should be aware of that might come up and bite me a little bit further down the line? So those are the 5 things: profitability, cash generation, affordability of debt, liquidity, and commitments and contingent liabilities. Those are the kind of 5 key things we're going to look at.
That's interesting, because you haven't put sales or turnover or revenue, however you want to call it, in there whatsoever. It's really about, can they thrive and survive as a business, and are there any pressures or liabilities that might impact their ability to do so? So that's hugely valuable, what you just shared there. You've promised some examples. Should we have a look at some examples then?
Absolutely. Okay, so let me share a screen with you. I'm going to share my second desktop. So here it comes. So my desktop is over here. So if I'm kind of not looking at you, Moeed, then I'm not glazing out of the window and wondering when the sunshine's going to come. I'm actually looking out here. So let's have a look at profit margins. So let's look at a company like, so we're going to start off with Facebook.
Yes.
So I'm just going to pull up Facebook for us. Here we go. So here is Facebook. So just looking at Facebook, and I'm just going to use my annotate. So Facebook, we can see the sales of Facebook. I'm circling there. 55. That's about $56 billion. Okay, so Facebook is making $56 billion. And the profit of Facebook down here is about 22 billion. And if we think about it, that kind of makes sense, because what does Facebook sell? They just sell space on a website. It's two blokes in mum's attic running a website. It's a little bit bigger than that now, but that's essentially what Facebook is. It's just selling space. They don't physically manufacture anything. So they've got a very high profit margin. They're effectively saying that for every dollar they sell, it costs them 60 cents to run Facebook, and they get to keep 40 cents. That's a massive margin.
So just to be clear, when you talk about profit, because you've got EBITDA, and then is this the equivalent of EBITDA what you're looking at now, or is this
not? It's
right.
not. So there's a number of different profit margins. So you'll see here in the middle there's a profit margin. This is called income from operations. Okay, and that's actually also known as EBIT. So
Right.
EBITDA is that, but deducting depreciation and amortization. Now, the depreciation and amortization for Facebook is minimal because they haven't got any assets.
Yeah.
You know, they've got a bunch of laptops and servers. They don't really have assets like
Machinery and stuff like that.
exactly. So if you think about you think about an infrastructure company, a network operator, or a gas company, or an oil exploration company, they're going to have lots of assets. They'll have lots of depreciation. So for Facebook, it's a little bit less relevant. And EBITDA, the way to think about EBITDA is it's controllable profit, because I can't control the tax I pay. I can't control the interest. I can't control my depreciation and amortization. So I'm looking at things I can control. So what we see, this line up here, this is our sales number. This is known as the top line. Clues in the name because it appears at the top. And we can see that what I'm looking at is the net profit, which is known as the bottom line. So this is the profit after deducting every single cost of running the business. So if you think about it, Moeed, if you go into your local supermarket to buy a Christmas turkey, for example, the supermarket buys the turkey from the turkey supplier. Okay, and so they'll pay this much for the turkey and they'll sell it to you for this much. They make a very small profit. Okay, so Tesco here in the UK, their turnover is about 65 billion. Okay, that's about the same as Facebook. But their profit is minimal because they've got to run Tesco and they've got to buy all the stuff that they're selling to you. Facebook doesn't have to buy anything. It just sits there and says, I've got a website here that lots of people are posting fluffy cats and hashtag my life is better than yours posts on it. I'm going to charge you to, I mean, there's a little bit more. And actually what's quite interesting is this number here, one of the biggest numbers we notice is research and development. So Facebook is spending a lot of money today in order to maintain its market share and build sort of strength for the future. So you might have a lot of people capitalize that. They take it out and stick it on the balance sheet. But Facebook's like, we got so much money, we're so profitable, we'll just expense it today. It's not a problem. So if you look at someone like Facebook, for example, and let's just clear that, and we compare that to, and I'm just going to move my little, so if we compare that to, for example, Amazon. So Amazon are right at the very other end of the spectrum. Amazon look a little bit like your supermarket. So everything you buy on Amazon, Amazon has to buy, or they're just letting resellers access it. So if we look at the similar numbers for Amazon, here they come. So let's put some annotation up. So the sales for Amazon, twice the size of Facebook. Okay, so twice as much. Yet look at the net profit down the bottom.
Oh, wow.
Minuscule. So Facebook, very, very profitable, whereas Amazon is much less profitable. Now they're making a profit and that's good, but the profit they're making is very small. Amazon is trying to make a global domination by basically killing the high street. Okay, and they do that by discounting. It's cheaper than Amazon. It's not always cheaper on Amazon, but that's their mantra. It's cheaper on Amazon. Okay, so you can see, look at the cost of sales coming in here. Look at that cost of sales figure. That's the cost of the things that they sell. So when Amazon sell my book, okay, which you buy. So if you buy my book on Amazon, Amazon have to buy my book from the publisher. Okay, so they'll buy, its list price is £15. You probably get it on Amazon for less than that. You'll probably pay, I don't know, £12 or £13. They'll buy it from the publisher at about £10 or £11. They're making a very small margin. So different companies, different business models. Let's look at another one, for example. So I'm just going to clear that. And let's look at, hold on. Let's look at Tesla. Okay, so Tesla in the news at the moment. SpaceX, one of their rockets just blew up on landing today. So there you go. We're making it all very relevant. So here is Tesla. Now you notice with Tesla, again, their sales, reasonably high. Lots of people buying Tesla, their electric cars, etc., etc. However, the profit is a loss, and they've been making a loss. Basically ever since, in fact, I think they've broken even. So in 2020, they actually started to make a profit. So you'll notice this is only 2019, the last full set of accounts.
Mm.
Okay. Now, this is quite interesting because Tesla's market price is bigger than Ford, General Motors, and whoever else is put together. I mean, it's crazy, crazy. And the CEO of Ford says, listen, this is mad. If I make a loss, my share price goes down. If Tesla makes a loss, the share price goes up. So we need to be careful that we're not equating the value of the shares to what we're seeing here. There's a link, but lots of people are looking at Tesla and saying the future is electric, Tesla is electric, therefore Tesla is the future. Do you know what the best-selling electric car is here in the UK?
No.
Any idea? Any guesses? Who makes it?
Toyota?
It's Nissan. Good guess.
Oh,
It's
wow.
Nissan. It's the Nissan Leaf is the best-selling electric car. Yet Nissan still have to make a profit. So,
Wow.
personally, I'm a little bit, I mean, Tesla's a high-risk play. It's very expensive. You may want a little bit in there, but I wouldn't bet the shirt if that makes sense.
Right. Yeah.
Last one. Let's look at our last one while we're looking at profitability, because I do want to bring this one up. Here's Apple. So we're looking at Apple. Let me just clear those old annotations, if I can. Here we go. So here is Apple. Just move the numbers up so we can see the whole thing. So Apple. Now, Apple, massive company, really, really big. Now, you'll notice with Apple, their net profit is the same as Facebook's sales. Okay, so their net profit is the same as Facebook's sales. And look up here, look at their sales, total sales. They're selling $214 billion of iPhones and iPads. And they've also got things like the iCloud and all those kind of, Apple TV. Those are all the services that they're offering. There's a cost to them, but they still make a very, very healthy margin. So they're kind of somewhere in the middle. So you've got Facebook, which basically is making a sale with no costs at all. You've got Amazon, which is making sales with very high costs because it's basically a discounter. It's an online Walmart, for the sake of a better example. And you've got Apple somewhere in the middle, which is making things, but still charging a very healthy premium. The cost to Apple of the iPhone is nowhere near the $1,000 that they charge you or I to buy that iPhone.
So those are some incredible examples. And what you're saying there is it's all within the context, right? So the finances, even though you see the profits, you've still got to understand the context of what products or services they're actually providing. And that gives you an indication of why they might be subject to lower margins versus other businesses,
You're absolutely
even if in the same sector. Yeah.
So you're absolutely right. So you're thinking about the business model. So what you find is that one metric doesn't suit everybody. You mentioned EBITDA, for example. I don't measure my business on EBITDA. I have no depreciation or amortization. I don't have any debt. I don't pay any interest. So if you go to an infrastructure company, they live, eat, and sleep EBITDA, return on capital employed. You go to a services company, it's less relevant. Facebook won't talk about EBITDA. It's just not really a relevant metric in their business, for example. So you're starting to think about different business models. And we haven't got time on this call, but what we're starting to get into here is what we call operational gearing. And operational gearing shows the price sensitivity. So for example, Amazon is very price sensitive. If they sell you the book on their website for, I don't know, let's say £12, and they drop that down to £11.50, their margin, which was already small, actually becomes quite significantly smaller. Whereas Facebook, if they drop a price on an advert, doesn't make any difference. It's just they're going to make a little bit less sales, for example. Right. So Facebook not price sensitive. Amazon, very price sensitive. And this is important when we're selling. We're thinking about, I need to understand my business, how much I can discount, for example, and what impact that's going to have.
So that's really interesting because we're starting to talk about the way that those executives of those businesses view the company and especially the decisions that they have to make. And in sales, I mean, the decision we're after is to make that sale. But for the buyer, the decision they have to make is, am I making the right decision? Not just whether this vendor or the seller is the right person to work with, but am I deciding on the right solution for the situation or the challenge that I'm experiencing? And one of the things that salespeople frequently come across is the CFO or the financial controller, whoever it is in finance, that has to approve the proposal of the solution that they are selling to that company. And most sellers don't really understand, they don't have a full appreciation for how that financial person is thinking, what are the things that they're looking at in order to evaluate whether what you have to sell is worthwhile. Can you help us unpack that and understand, the mind of the CFO or the financial person? What are they thinking? And more especially, what are they looking at in your proposal? And how does that fit into maybe either their financials of the business or the way they think about the business?
Okay, so that's a good question, and actually, so what we're sort of starting to think about here is, first of all, if I'm a salesperson, I've got to read the ITT. So if I'm responding to an invitation to tender or a request for a proposal or whatever it is, you've got to read that and look at what the client thinks is important. So if they say, for example, we want to see, some financial analysis or whatever it is, and they attach a 20% weighting, they're basically saying this is how important it is to us. So for example, if they come up with a budget and say, it's important that you stick within the $100,000 budget in your proposal, don't come in at 105. You're just putting yourself on a back foot. So work around that that guidance from the invitation to tender. As a buyer, really simply, the first thing I'm going to do is I'm going to say, is it Opex or Capex? Okay, right. So am I doing an operational expenditure? Am I doing a Capex? Opex is going to appear in the income statement. So that's operational expenditure. So for example, Opex for Apple, we're looking at Apple. So yep. This is Opex. Okay, this is the cost of the. So if you want to produce iPhones, if you want to produce the chips that go into the iPhones, then the cost of those chips will appear in that circled bit there. If you're actually pitching to Apple itself, you want to, you're going to charge them rent to occupy your building, you're going to provide them with legal services or IT services or whatever it is, then that's going to come into this section here. Okay, these are the costs of running the business. So I'm starting to think as a CFO, is it operational expenditure, and am I going to treat it as a cost of sale, or am I going to treat it as an overhead, a cost of actually running my business? Okay, so that's the first one. If I'm not going to treat it as Opex, then I'm going to treat it as Capex. Now, Capex appears on the balance sheet. Okay, so there we're going to look at Capex here. Here's the balance sheet of Apple. It's going to be an asset, so I'm going to treat it as an asset, and it's going to come in to this number here. So this is the PPE, or the property, plant and equipment. Okay, so this is going to be things. So if I'm buying a new production line or a new plant and machinery or whatever it is, in order to generate a to help me run my business. Now the decision-making process around this is different. Because if I'm buying a piece of machinery from you, I'm going to use it today to generate money in the future. Okay, it's going to improve efficiency. It's going to help me to generate some form of return on that investment. Okay, so I'll give you a quick question for you, Moeed. Would you rather have $100 today or $100 in a year's time? Would you rather have $100 today or $100 in a year's time?
Today. If it's $100, then
yeah, absolutely. Okay, so that's the right answer. You thought about that. I saw you. But Ted's not going to catch me out. Okay, second question. Would you rather have $100 today or $1 million in a year's time?
No, $1 million in a year's time.
Okay, so $1 million in a year's time. What you are demonstrating through your answer to those two questions is what we call the time value of money. And what we recognize is that $100 today is worth more than $100 in a year's time. So if I started with $1 million and I came down, at some point you would say, Ted, I am indifferent between $100 today and $100x in a year's time. And that X demonstrates your time value of money.
Right.
So the finance guys now need to work out what is that future cash generation, and then they discount it using discounted cash flow back to today, and they work out what we call the net present value. So what they're trying to work out is the cost I buy the machinery from you, is it going to be less than the present day value of all of the future cash flows that your machinery is going to give to me? Okay,
Right.
and we use things like cost of capital, what we call the WACC, return on capital employed, IRR, lots of kind of these calculations in order to kind of understand that. So if you're a salesperson, you're selling hardware, you're selling investment in assets, understanding that concept and being able to articulate it to your client shows I understand how you're thinking about this investment from a financial perspective. And that again puts you ahead of the person who just goes, buy my product.
Right. Okay. So that's why, for example, when if you're selling a machine, then the durability, the output, throughput, etc., the quality of that machine, the less maybe maintenance it requires, means that there is an increased value. Sorry, what was it you said? Time value?
The time value of money. We
Time value of
recognize
money, yeah.
that the money I receive in the future is worth less to me than the money I receive today.
So if you describe your product in that context to say that actually the time value of your money is going to be much, much larger than if you go with someone else that isn't as durable, doesn't have the same type of throughput, requires more maintenance, then our option is the better option.
Exactly. So you're demonstrating, you might sort of have this, this kind of natural connection between price and quality. And you might say, look, if you buy, it's a little bit more expensive, but you won't have to, pay the repair bills.
Yes.
And sometimes actually, maybe maybe we don't need the best quality. Maybe we can go for something cheaper, pay a little repair, and actually. So again, thinking about, who am I competing against? What's their product? What's my angle? What's my kind of, where am I coming at this from a sales perspective? And then articulating that both in terms of the kind of the sales patter, which you guys all live and breathe, but also in a commercial context. Okay. And quite often you have the finance guy sitting in the meeting. They may not be the ultimate decision maker, but they may be the person with the red pen who's going to put a line through your proposal. So you've got to appeal to commercially as well as practically, operationally, etc., etc.
So Ted, what about if you sell software? There's a huge number of cloud-based service providers right now, or even subscription-based service providers, because we're also saying that there is an ROI to the product or the service that we're proposing to provide as well. So how do CFOs and financial leaders think about that? Because it sounds like it will go into Opex, but then how do they think about Opex?
Well, I guess what you're articulating there is a kind of a rent or buy mentality. Should you buy your house or should you rent your house? Should you buy your car? Should you rent your car? And you think about the world today, we're moving into generation rent. So, I don't know about you, Moeed, but, in my day, we used to go out and buy our LPs, and I've got a collection of big LPs and my kids find them and go, Dad, look at this CD. It's massive. Where does it go? What is this thing? And if you think about it, I mean, my first chat up lines to the ladies earlier in my life was, do you want to come back and look at my record collection, for example? You know the euphemism.
Yeah.
And I don't know what the kids use today, but do you want to come back and look at my Spotify playlists? I don't think really has the same kind of capacity. So we're moving from this world of owning stuff, owning records, owning cassettes, into having my music on my Apple iPlaylist to renting my music through Spotify, Apple Music, etc., etc. So you kind of think about, would you rather buy an album or would you rather pay a monthly subscription to have access to all the music in the world? And so you're starting to, so if that's kind of the way you're thinking about it. You're thinking, would you rather buy a car and have it forever, or would you rather rent that car and every 2 years you can just upgrade to the latest car in the line and you don't have to worry about it, for example? And this is kind of the trade-off that we're starting to think about. So if you're selling me cloud services and you're saying, look, you can store all of your data in a data farm in California, you don't even have to worry about it. I'm thinking, well, at the moment, I've got an operations center, I've got to run it, I've got to buy the servers, I've got to upgrade the servers, I've got to employ IT technicians to kind of sort it out, who are going to deal with it, and when it gets flooded, I've got a problem, and all that kind of stuff. And you're thinking, and then you start to think, well, what do I actually do? If I'm Coca-Cola and I'm making cans of Coke, why am I spending all this money on data centers? I should outsource that to a data center expert. So you then start to have this kind of Adam Smith's invisible hand at work, and so people are starting to think, what is more efficient? I should really be focusing on what I'm good at and outsourcing everything else. And then you've got, product, you've got, the service, the service reputation, for example. So I'm an Apple fan, old Muggins here, so I'm spending a lot of time using Apple products, for example, and I'm thinking about should I be investing in iCloud? I use the iCloud. It doesn't cost me very much. It's nice and simple, and I trust Apple. I trust them to look after it. I trust them to protect it. I'm actually finding that all my files, for example, I used to buy hard disks. I've got hard disks all over the place. I've got a backup here and a backup there. What happens if I lose my laptop, Moeed? Everything I own is on my laptop. Well, it's not. It's actually on the iCloud, and I find that quite annoying, because I get on an airplane and I go, right, I'm just going to work on this file, and it goes, file isn't available. It's sitting in the iCloud. You've got to get it and get it onto your laptop before you get on the airplane. Okay, so it has its advantages and disadvantages, but I'm feeling a lot more comfortable now. If I fly somewhere and my laptop breaks, all I need is an Apple laptop, bang, and I'm up and running. Everything's there. It's sitting in California.
So you want to make sure. Okay, so what they look at is this a Capex expenditure versus an Opex expenditure?
Absolutely.
What is the ROI, and specifically in terms of the time value of money?
Yeah, so you're starting to compare what's the cost of buying versus the cost of renting. Ultimately, everything's a cost. That's what depreciation is. So depreciation is merely matching the cost to its useful economic life. What would you rather do? Would you rather buy a table for $100 that lasts you for 10 years, or rent a table for $10 per year for 10 years? Ultimately, it's the same thing. It costs you the same, but one is Capex and one is Opex. And that's kind of the balance that you're looking at. So if I'm a salesperson, the first thing I'm doing is say, Moeed, what kind of budget are we working with? Are we working with an Opex budget or a Capex budget? Because if you're think about my table. If you're working, you say, Ted, I've got a Capex budget, but I've got no Opex budget. I'll say, Moeed, buy my table for $100 and I will service it for free. And if you say, Ted, I've got no Capex budget, but it's all Opex, I say, Moeed, I'll give you the table for free, but I will come and look after it and polish it every year for $10 a year.
Right, that's very interesting.
Okay. Now, there are rules. There's IFRS rules and so on and so forth that says, it's called substance over form, and there are certain things you can and can't do. But it starts to give you a sense of understanding it. So don't pitch to the client. Don't go in and say, hello, Mr. Client, this is me, this is my company, this is my product, we're wonderful, buy my product. Start off by saying, Mr. Client, my understanding is that this is what your company does. These are some of the pinch points. What are your biggest challenges? How can we help? Oh, okay. And sell the solution. Don't sell the product. But so you talk that as well as I do.
That makes real sense, and there's some really interesting approaches that you've taken there that I've learned a lot from. And you've talked about budgets a few times, and I really want to ask about this, because as salespeople, we face this question, face the response all the time, the natural knee-jerk response, which is, I don't have the budget. And my belief, and from the interviews that I've done, and discussions with hundreds of salespeople, most salespeople don't have a real appreciation and understanding of what a budget is, how it's created, how it's thought about and allocated in a business. Can you share some insights about that and some information for this?
Absolutely. So, and actually, interesting. Budgeting is usually a kind of a junior or middle manager's first exposure to business finance. So I often have people who sit on my workshops and they say, Ted, I've been put in charge of a budget and it's just numbers on a spreadsheet. I have no idea what's going on. So we kind of, so everything we go through is kind of putting that into context. So the way you think about a budget is this. The budget are the financial implications of the operational decisions that you need to make in order to achieve the overall strategy. Okay, so we set our strategy, we work out the operational decisions to achieve that strategy, and the budget is merely the financial implications of what you intend to do. And that's probably the best way to think about it.
Right.
So, for example, I speak to the chief executive of my house. That's Mrs. Wayman, to you and me, and I say, "What is the strategy?" And she says, "The strategy is we're going to go to Center Parks." Okay. Now, I don't know if you've ever been to Center Parks. I have 5 kids, so Center Parks is very expensive. So everyone works out what they're going to do and what activities they want to do. And little Esmeralda wants to do, painting, I don't know, seahorses or something, and then crockery in the afternoon. And little Tarquin, and I don't have Esmeralda or Tarquin, it's okay, but he wants to do archery or quad biking or whatever it is. Then we have to optimize it because you suddenly find you can't do archery and quad biking at the same time because they you have to do one or the other on at the same time. So you optimize it. They then all go off and kind of go out to play, for example, in the garden. And the CFO here, Muggins, I then add up and I cost out every single activity. And I get to the end and I go, "You've got to be joking!" And we're going camping in the West Country for a week instead.
Right.
But that's kind of what a budget is all about. So a budget is the financial implications of what you need to do in order to achieve your overall strategy. So if you're a salesperson and the overall strategy is we need to bring in, 15 new clients, we need to maintain these existing clients, we need to sell this much, et cetera, you need to be thinking about what do I need to do in order to achieve those strategic goals? I need to, I have a meeting here, I've got to travel to that. And you can start to work out that I'm going to need to be on the road for this amount of time. I'm going to need this many meetings, this many miles, this many hotels, this many flights, this many lunches, and all the rest of it. And you start to build up the financial implications. Okay. Now, for a salesperson, the sales forecast is the sales budget is really, really important. So if we take, for example, Coca-Cola, here we go. So here's a can of Coke. And I talk to the salesperson. I say, "How many cans of Coke are you going to sell?" Well, he goes, "Well, I'll sell as many cans of Coke as you can produce." No. You tell me how many you're going to sell. Yeah. Because I need to speak to all the logistic guys. I need to get the tin sourced. I need to get the coloring and the water and the bubbles and the sugar. I don't want to be buying tons and tons of sugar, getting it sitting in my warehouse. I need to find that, the salespeople could only sell 3 cans of Coke because they weren't on their game, for example. So accurate sales forecasting feeds back into the production process and makes sure that you can actually deliver. Because the last thing you want to do is to go out and sell 1 million cans of Coke and then suddenly find, "Really sorry, the warehouse is empty. We can't deliver." Okay, so accurate sales forecasting, if you don't have accurate sales forecasting, you either have empty warehouses or you have warehouses which are absolutely jam-packed full.
So that's interesting. So what would make a finance person release more budget? So let's say, for example, that you are selling to a chief technology officer of a company. You are proposing a solution that they believe in, and they now, and it's not within their budget, or at least it's not within the category that it's being allocated towards. And they need to now go to the CFO to ask for more budget for this. What would convince a CFO to do that? Because I'll tell you why I'm asking this question, Ted, because a lot of the times us as salespeople, we have to coach our buyers to have the right discussions internally with their stakeholders. And obviously the CFO is one of those stakeholders. So what would that CTO have to say in order to convince the CFO to release more budget?
Okay, that's a good question, Moeed. And the first thing is you've got a challenging conversation here. Okay, and the reason you've got a challenging conversation, if we think about, for example, something like Facebook, Facebook will, it's a listed company. So part of the budget that they put together says, we think we're going to make this much profit next year. Okay, now, if you increase your costs, your budget goes down. Okay, and and the CEO Zuckerberg doesn't want to go to the market and say, we said we were going to make 20 billion, we only made 19 billion. Okay, because the market share price is based on him making 20 billion. So there's managing those market expectations. So immediately you're going to get a lot of resistance if somebody wants to go over budget. It's not impossible, but you're going to get a lot of resistance. Now, if I'm the CFO and it's a really compelling business case, I'm going to be thinking, you know what? I'm going to take some budget over here and allocate it over there. So what you're trying to do is to demonstrate how compelling the business case for that investment or that expenditure is, and convince them to reallocate budget. Okay, so you're trying to get it from somewhere else within the business to your area, or you're trying to demonstrate how there's an immediate return because sales will increase. So if your sales go up by $100 and it costs me $100, at least I'm not making a loss in this year. But an expenditure, Opex, in this year that I don't benefit from until next year, hard sell.
Right. Okay. So definitely,
not impossible, but it's a hard sell.
It's a hard sell, yeah, and especially in recession or when markets are softened, if you can't show quick return, then it's going to be put into visionary or long term, and you're not going to get the decision. So that makes sense. You mentioned earlier about immersing yourself in the language of finance. I want to talk about that. How should you immerse yourself in the language of finance? What are the resources and what are the habits that you would recommend for someone to learn and kind of immerse themselves?
Well, I mean, the first thing is, get hold of the financial statements of your business and immerse yourself in those financial statements. And I'm going to be a little bit cheeky and just give you another example, if I may.
Yeah, please.
So I'm going to show you here, if I can.
I think you need to take off the annotation.
Oh yeah, I've got to take off the annotation. Thanks. So if I'm going to show you here, Thomas Cook. So Thomas Cook, a really, really good example, I think, where it's kind of like, what did they get? They went bust 2019.
Yep.
And we had the biggest repatriation here in the UK, the biggest repatriation since the Second World War of overseas British citizens. And people go, why didn't they see it coming? Why didn't you see it coming? Okay, well, what I'm showing you is Thomas Cook's accounts in 2010. That's 9 years previously. And I talked to you earlier about the affordability of debt. Okay, and if you look here, the profit, we're looking at this column here. This is the total column. And the profit from their operations is about £170 million.
Okay.
The interest on their debt is £180 million.
Right.
Ding-a-ling-a-ling-a-ling-a-ling, alarm bells. You can't afford your debt. Now, the number of times I've sat in a boardroom of a company having discussions about we're running out of cash, we can't afford it. And people outside going, oh yes, I work for Thomas Cook, I'm absolutely fine. Isn't life wonderful because I'm looking after my clients and I'm doing this, that and the other, okay? Understanding the financial drivers of your business, understanding the financial pain points, I think is absolutely crucial. So get your financial statements, read and interpret them. Buy a book on finance and use that to kind of learn about it. Get involved in the management information of your business, the kind of the budgets. Get access to it. Speak to your manager and say, look, when you have a monthly review of the numbers, can I sit in on it? Because it's going to be really helpful for me to understand my business. Salespeople, get the financial statements of your clients. Anything you possibly can. Read them. And then, and this is a real this is probably the biggest challenge for salespeople. Make friends with the people in the finance team. Okay, I know they're not the most exciting people, but make friends. Go and see them and say, listen, I've got a meeting with a client coming up tomorrow. I've got their financial statements. I've read Ted's book. There's a couple of things I'm not sure upon. Can you help me? Can you kind of, am I correct in assuming this? Have I read this right? Okay, so use the finance guys in your business. bring them along if you want. I mean, they'd love to come to a sales meeting, and maybe it's an opportunity to improve their commerciality, sometimes they're not be so good at. But, you know, use those financial statements to make informed observations to your client, build rapport, show how you've done your homework. You've made a bit more of an effort than all the other numpties sitting in reception who are just trying to flog a product. Okay. Ask questions, constantly ask questions inside your business. Ask about your clients. The numbers don't give you any answers. They give you questions to ask.
Yeah.
And they give you insightful questions to ask. The problem is most people, if you don't know how to read the numbers, you don't know what the questions you should be asking are. So good salespeople ask questions. And don't let the finance guys baffle you, okay? So I'm a finance person. If you come to me with a question and I really can't be bothered to answer you, I will talk at you, Moeed, in the language that you don't understand until your eyes glaze over and you lose the will to live. So the aim is, don't let them baffle you. You know, you've got to penetrate this language.
So what about with private companies, right, who are under no obligation to release their finances? So if you work in a private company, you know, how likely are they going to show you the financials of the business if you ask for it? And also, if you're selling to a private company where the financials are not going to be readily available, what's your advice about how you can try to maybe not find the finances, but certainly try to find indicators that will tell you some, or give you an indication of some of the questions you should be asking in the absence of financial information?
Well, Moeed, the first thing to notice is to mention is that the financial statements are publicly available. Okay, so here in the UK, and you know, if we think about it internationally, here in the UK, every company must by law prepare financial statements and must file them with Companies House. So if you go to Companies House, that's COMPANIES, Companies House, and you type in the name of the company, you'll get their financial statements. Now, sometimes they won't give you a huge amount of information.
Yes.
But they'll give you little bits of information.
Yeah.
And they'll give you enough of a snippet. So little companies don't have to produce everything, for example. But bigger companies do. So even if they're private, the financial information is still available. I would suggest, if they're not available, ask the client, ask the company, say, you know, do you think I could get a copy of your financial statements? Now, if you're in somewhere like, I don't know, in the Middle East, I do a lot of work at, you know, Saudi, you know, that information is not forthcoming. In which case, what I will often do is take a similar company who's a competitor and say, well, I can't see your accounts, but I was looking at one of your competitors and I noticed that this is a challenge for them. Is that a challenge for your business? How do you deal with that challenge? So you can draw parallels, you can actually look at, and then there's a wealth of information out there in terms of, you know, just looking in the, you know, Googling, for example, for, you know, for you know, financial information. So if you can't get hold of the financial statements, you can usually think, you know, quite creatively about how can I get something which is similar, or at least just shows I've made a bit more of an effort. I'm a bit further down the line, because, you know, sometimes all you've got to do is to be better than everybody else sitting in the waiting room.
Yeah, no, those are some really good points there, particularly, you know, looking at proxy information, i.e. competitors, or even in the industry as well, right? So, you know,
benchmarking, exactly.
Yeah, so buyers have often said that one of the things they value most in salespeople is the knowledge of their industry, not necessarily their company, because everything works within the context.
And actually, it's not necessarily knowledge of the industry, it's a willingness to gain that knowledge.
Yeah.
So if you look like you've done your homework and you haven't quite got it, it doesn't matter. Hey, listen, I know my industry better than you do, but at least you've made an effort. At least you said, you know, my understanding is that your company really focuses on this. Most of the revenue comes from this area here. I see you operating at this kind of a profit margin. I couldn't get hold of your financial data. Are you similar to, I think you operate in the same companies, you know, same sector as these two companies. I had a look at them. I noticed that, you know, one of them struggling with, you know, cash flow, for example. Is that something which you find is difficult in your business? How do you deal with it? Here's somebody who's actually taken the time to think about me and understand me, rather than just turning up, here's my product, buy my product.
Yeah, no, that's really, really helpful, Ted. Thank you for that. I wish we had more time, but we seem to have.
I've got so many more examples
I
that we're
know
meant to be
there's so
talking
many,
about.
and I've seen the posts that you've put out on LinkedIn, etc., where you show some of those examples, and it's just a huge amount of information there that's valuable to learn from. Ted, how can people get in touch with you if they wish to, or learn more about you?
Well, so I've got a few slides here, which we're obviously not going to go through, but so those are my details. So the best thing to do is Talk Financials is my website. The best way to get in touch with me is through LinkedIn. So there's a QR code up there. You can either hold up your camera to it. There's only one of me, so I'm very easy to find on LinkedIn. So anybody who wants to stay in touch, just send me an invite on LinkedIn, and it'd be great to stay in touch. We've mentioned the book a couple of times. It's a little bit out of date, but actually the concepts really haven't changed. It's 2015, I think I wrote it. The numbers may be a little bit out of date, but the concepts are all as valid today as they have been. And that's available on that very big bookseller that we were looking at earlier. So it's available on Amazon and other online booksellers.
Yeah, fantastic. And Ted, this has been super helpful. And just as a note to everyone that's viewing this, if you're especially in sales, look, right now sales is changing again, right? And the older days of just talking about your product and service, I mean, that was outdated 10 years ago, 12 years ago. It's now become even more outdated. And the ability to help your buyers, especially executives or leaders, make more informed decisions, that's where you're going to differentiate yourself, because that's a core part of what a leader does, is to be able to make those right decisions. And that is rooted in the financials of the business. Right? Is my decision going to create this much revenue or save this much cost? How does that fit into the financial statement? And how does that show in terms of decisions that I made? So this talk from you, Ted, was absolutely valuable. And anyone in sales or business who does not want to learn about finance, you're really missing a trick here. And that's going to be a big hindrance to your professional development as well. So Ted, I want to really, really thank you for an incredible session, and especially the examples that you shared, which really, one of the things that I loved about what you do, that's what I described earlier. So thank you very much, Ted, for kindly joining us and sharing your wisdom with our group.
Okay, well, thank you very much for having me on, Moeed. I really enjoyed it. It was great.
I'm glad. Thank you, everyone, and we'll see you on the next show.